All right, gang, good afternoon. I hope you guys had a great weekend here and ready to hopefully rock and roll this week, right? As you guys know, it was a pretty hectic, actually, 2 weeks. And then we actually finished very strong on Friday. I'm not going to jump into all these bullish plays. I'm still going to go ahead and be cautious, a little bit further out of the money, a little bit lower credit. And I'm going to go more neutral to slightly skewed to the downside still because we are on the high still, right? And everything going on, they're still absolutely potential for another downside push here. So I'm just going to play a little bit safe. So the first thing I want to do here is I actually want to hedge the market with the S&Ps, okay? And I'm actually, it's not going to be /ES. It's actually going to be the minis because it's too expensive to play these ones right now. But the minis are actually affordable. So I want to hedge it to the downside a little bit, okay? As you can see, S&Ps are doing pretty good. All-time high up here at, 39.59. We're right about that 8 and 21 EMAs here. If I zoom in, we just closed above that earlier. So I still want to play it a little safe. So what I'm looking at doing is selling a short skewed strangle here. And as you can see, I'm going to be looking well above those all-time highs in case we do continue to rally. We're going to have a lot of resistance. 4,000 is actually going to be a really big one. But I also have, my other short strike below that 200 day to account for if we do pull back, right? So looking at this one, it's going to be the MES, all right? And 40 days out, so a normal trade. And on the call side, I want to go ahead and sell the 15 delta call, which is the 40-50 strike. And then on the put side, I'm going to come down here and sell right around this 33.50. That's a 10 delta strike. So it's going to lean it short here a little bit to the downside. Okay, 15 versus 10. So we got about 5 deltas short, while still keeping it past expected move and leaning us short. So in case we do pull back. Okay, that's going to give roughly about $190 in credit. And it's only going to cost about $766 to put on while giving us about a 75% pop here, okay? The next one here that I want to look at is soybeans. Soybeans are rocking and rolling right now, okay? Let me zoom in. You can definitely see how bullish they are. All right, we've been riding that 8 EMA here, and we're coming up near those highs, but we have a nice medium squeeze on the daily still. Our 78-minute fired, it had conviction on Friday. The 130, I mean, this thing is squeezes all over the place. Here's the 130 with a squeeze, the 195 with a squeeze, and then obviously our daily with an early entry signal and a squeeze. So there are multiple squeezes, multiple indicators pointing to the upside. So I want to go ahead and jump into this one. Now this one has decent IV, almost 54% here. And looking now into April, okay, 47 days out. And I want to go ahead and for a defined version of it, looking right around selling the 1360s, buying the 1350 puts. It's going to give you about $145 in credit. Right now, the buying power is actually fairly cheap, but it does cap you. And it's going to give about a 70% probability. Now, those that want to go naked, I'd be looking right around the 1350s. It's going to give about $750. And it's only, I say this with little grain of salt, but it's only about $1,700 to put on, but that's not bad when you're getting $700 in credit, and then that's going to give you a 75% chance as well. So defined, and then obviously undefined, okay? And you can even play it a little bit safer if you want. It's just, it's, a little bit more bigger bid-ask spread there. So, it doesn't really tighten up until the 1310s, which is still reasonable on the credit. I just don't like that buying power. So right around that 1350, okay? Now, the next one that I'm looking at, you guys, is Facebook. I currently have a short Facebook at the 280s, but this is a great stock to play defined risk with, like an iron condor. It's treated us pretty well. So what I want to do here is, as you can see, we're sideways, slowly trending down here a little bit. So I want to play a short skewed iron condor with Facebook. All right, and so I'm looking at the 290, 230. As you can see, 290 is way up there. 230 is going to give us a lot of room down. We got multiple lines of support here on that one. So with Facebook, okay, still decent IV. We're looking in April Okay, there's my current position. But I'm looking at doing a 290, 295 on the call side, and then a 230, 225 on the put side. This is going to lean it short by about 2 deltas, giving us really good probabilities. You know, I like that 66 pop, and I really like that 81 P50. So really good odds. As you can see, it's past the expected move, slightly short to cover any sort of downfall protection there. All right. Next one, you guys, is going to be 3M. There it is. Multiple squeezes again. As you can see, 3M has been sideways for a while, and it's actually still yellow on my 10x bars across the board. But when you look at it, we have here a weekly squeeze with momentum coming in. Okay, great squeeze there. We have, and then daily, we have another squeeze with momentum coming in, heading to the upside. 78-minute, we got conviction with a light squeeze, energy all coming in. If I bring over my squeeze early entry chart, right, there's on the 195 we have a medium squeeze, strength, early entry signal. Okay, and on the 130 another medium squeeze with an early entry. So 3M has a lot of squeezes, a lot of indicators pointing to the upside. So my goal right now, we broke through that 180.77. I'm looking for a run up to this 182. And then if we actually break that, I'm looking for that 187 push. So with 3M, okay, I'm looking at a debit spread on this one. I want to go ahead and go into April still, 40 days out. I want to buy the 175 calls and sell those 185s. Right around $500. It's probably going to be about $530. So it's not quite 1-to-1, but I'm okay with that. And it's going to be that 50% pop, and, you know, 60p50. 10 wide, risking just about 1-to-1 here. Okay, so I'm looking on this one because it's a debit spread about 25%. Okay, and then lastly here for you guys is UPS. All right, UPS again started to really take off back on Friday with that light squeeze, conviction coming in. We have a medium squeeze on the daily, okay, and our weekly still pretty strong with a medium squeeze trending up. And I believe, yep, there it is as well. This one also has an early entry on the 195 with a squeeze. So I'm looking for this an original push right up here to almost about 168.25. And if we can break through that, I'm looking for that to run up to, you know, that's the 168 right there. So 175 push, and then to those all-time highs at 180. So with that one, UPS again, IV is a little low, so we're looking in April with another debit spread, buying the 160 calls and selling those 165s. Hopefully not going to pay around $3. I'd like to pay less than that, so we'll see how markets open up. But right around, you know, pay 290, max profit would be about 210. Okay, and again, I'd be looking for about 25% because it is a debit spread. Okay, so that's it, you guys. Small little one watch list that we're looking at. We're gonna play it safe this week, and hopefully I'll see you guys in chat one day. So you guys have a great rest of your evening. If you're watching this on YouTube, guys, hit that subscribe button, hit that like button. I'd greatly appreciate it. Take care.